Welcome back. We've heard a lot about a segment we did on record high gas prices, despite a crash in oil prices. We did it on Tuesday night. And now there are serious questions if the oil companies might be in for a rude awakening, as even free market types are really upset with the oil companies because of their windfall profits that are now happening during a war. Since our report on Tuesday night, the president tweeted yesterday, oil prices are decreasing, gas prices should too. Last time oil was $96 a barrel, gas was $3.62. Now it's $4.31. Oil and gas companies shouldn't pad their profits at the expense of hardworking Americans. You can see the chart he attached, same one we showed you on Tuesday. Yardeni Research estimates the average American consumer spends an extra $2,000 a year because of the prices of oil, not just because of gas, but because oil, as it gets more expensive, makes everything we buy more expensive. Meantime, the big oil companies are printing money. Chevron and Exxon stock are up substantially in just the past month. Chevron up 14%, ConocoPhillips up 8.3%. BP's off, but that's because of their Russian liabilities. Most analysts expect record profits for the companies. Those profits come directly from your pocket and my pocket and the pocket of every American's. And the line from big oil and oil enthusiasts stays the same. Gas pricing at the pump is complicated. It's the free market, blah, blah, blah. That line is wearing thin with consumers and you, the viewers, who are demanding action. Here's how one economist explained the lag, quote unquote, we see between the price of oil and the price at the pump.
There are lags, as you know, between when crude oil gets to refineries, when it's refined into something like gasoline, and then when it reaches to the retail pump stage of things. So there could be a little bit of a time lag in that.
Trish Regan, former Goldman Sachs banker and trader, world-renowned business journalist, host of the Trish Regan Show, found on your favorite podcast site, with us now. Trish, you want to believe these people, and then you realize that it's shocking how fast the price can go up and how slow it is to come down.
Isn't that always how it is, right, Leland? Unfortunately, you know what? That's just the way the world works. And when we look at inflation that's creeping into the economy right now, look, a lot of companies are going to gain pricing power, right, as we call it. So the cost of diapers is more than you've seen it in decades. And the cost of soup is going up. And ultimately, what these companies, the big companies, have gained is pricing power, which will help them, by the way, once some of these energy costs, et cetera, start to go down in some ways, they've gained then that pricing power. So let's not forget that there's a, capitalist incentive behind the scenes going on where everybody's trying to gain a little bit more pricing power, including at the pumps. Although in this case, some of it is warranted.
So we put up the tweet from the president. And for even free market folks and advocates of non-government regulation, it becomes a little irritating at times. And the next part of that tweet, or the next tweet from the president, will be, and government should get involved to fix it. Is there any concern among the oil companies that, yeah, we may be able to make record profits this year, but if we keep this up, regulation is coming?
Look, let me start first with the president's tweet. Part of the problem here is people are trying to anticipate the future. And the future is not lower oil prices, right? The future is higher oil prices in light of the reduction in supply, including, 8% basically of all our daily consumption of oil that used to come from Russia that can no longer come from Russia. That's just here in the United States. Don't forget about what's going on overseas. And so the overall world supply is definitely being diminished. Now, when the president says, well, gosh, when it was $96 a barrel and it was only $3.60 some odd cents, and now it's $4 and some odd cents. Look, there's the reality that's being reflected, which is that we had a momentary decline in oil prices. I do not think that it is going to be long-lived, and that was tied to some difficulties.
Trish, I'm not arguing the economics of it. I agree with you, but from the political standpoint for these oil companies, it seems as though they are completely tone deaf to the real anger that is being felt by the American people, and who aren't sitting around and don't really care to hear the long explanation of big oil that is getting record profits.
Well, let's not forget, Leland, during the depths of the coronavirus crisis, there was what, $10 a barrel going on? And by the way, the previous administration was criticized because they went out and bought a bunch of oil to fill our strategic petroleum reserve, for which they were criticized for, just trying to help big oil. Now, big oil is sitting there going, we're not so sure that we want to invest in all these new drilling operations because why? Well, it's possible that the administration is not going to greenlight a lot of these projects. And by the way, it's possible that maybe we need to rethink some of our operations in light of what has happened in the past. So I think that there's a business sensibility that's creeping in. As far as the discrepancy in prices, I would just again, reiterate that it's a market that's based on, okay, the price of oil is here today, but what's it going to be tomorrow? And by the way, there's a lag time, right, between what you pay in oil prices as a trader and what you pay as a consumer.
Right, no, there's no argument. I can't argue that point with you. I'm more arguing the perception problem and sort of watching the arc of, you grew up reporting on Wall Street. I grew up reporting in the Middle East in Washington. And in Washington, if it works, tax it. If it keeps working, regulate it. When it stops working, subsidize it. For a long time, we subsidized the oil industry. But I'm getting the feeling that there is this growing willingness, even among some Republicans perhaps, to begin to regulate in a more serious way the profits of the oil company. Are they being tone deaf?
I would just say government is being tone deaf if they want to suddenly regulate big oil in an environment where, by the way, we need oil, okay? We need green energy. We need green energy and we need oil, all right? So there's an energy problem going on, and so we need more of it, not less of it. So the answer is not to say, okay, we're going to throw on all these regulations. The answer is let's have more of it, thereby cheapening the price of it. I get that, oil companies and big companies in general, I understand that there's some resentment in that they want to make some money. I mean, heck, I'm trying to book a vacation, Leland, and I can't believe the hotel prices. But you know what? Hotels were closed for 2 years, and now all of a sudden there's a ton of demand,
right?
And people want to go and travel,
and
and hotels want to make more margin.
Right.
And so I think that we can't say, okay, well, they're not allowed to make this. The answer is you need more of it, thereby flooding the market with so much of it that it drives down the prices.
Right. And you rightly point out it's a lot easier to hate on big oil than it is to hate on the hotel companies. There's not a big push in Congress right now to regulate the hotel companies. Trish, as always, thanks for being with us, explaining everything. Thanks for watching. Click the red subscribe button below so you can get more of NewsNation's fact-driven, unbiased coverage.